The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, and it is, of course, Friday, the last day of May 31st. My pleasure to be here live and in the office with no technical problems to deal with. And that was, yesterday we had a lot of fun. A lot of people came from all over the show. I really appreciated that. And just a great audience because, well, I say audience, but they participated. Terrific questions. We covered a great deal of stuff. I mean, we were all over the show. And we're also looking at charts, and we're looking at giving different perspectives, and looking at those weekly and monthly, especially those monthly charts. They are so important. That is the greater tide. And it's really imperative when you're looking at something like that to be able to formulate in your mind some kind of perspective on how pullbacks, declines can occur. What would constitute a major sell-off? I'm talking, I wouldn't say crash, but just a really major 22%, like April of a few years ago when we pulled back really sharply. Can that happen if there's still rotation? Look at this. The futures this morning were down very sharply. The S&P, in fact, was down over 10 points. Right now, they're up 1. The Dow was down 90-something in the futures, 99. And now the Dow is up 36 at the high of the day. The persistence of folks realizing that bonds are not going to give them capital gains, and there's so much talk about giving them very powerful declines in their portfolios, that the question keeps coming up. Had it yesterday. What do we do? And that is, that's a tough question. That's a Bernanke type question, because Bernanke, in his own way, has been answering it by saying, "I'm sorry, I don't really care. I mean, I'm worried about it, and I care in the sense that as a human being, I'm upset about it. But I have to take care of the greater number of people that are reliant on jobs, because jobs is what keeps the country moving forward. And that's my focus. I want to keep rates as low as possible as long as the housing sector, as long as the retail real estate sector is alive and well. That's what I want, because from that, I remember reading a report so long ago, I can't even remember when it was, but if you had to look at the number of offshoots that occur from the purchase of a property, it is huge. You've got paint, you've got supplies, you've got roofers, it just plumbers, electricians. It goes on and on and on. Then they have to employ people, so that is really important. Then I spoke about the longer term outlook for real estate as I saw it. Also, we discussed in pretty strong terms what would constitute in the general marketplace, what would constitute a problem when we get to leg D, which I'm implying in the monthly charts that you will get to a leg D. All those things. It was just fascinating. Of course, we could have gone on for another couple of hours always. But that I love doing that. Now, let me just do this. I want to go to something right now. I want to just give a quick spin around the block. And don't forget, this is the last weekend coming up for you to use your Tiger dollars. Many people decided they would use Tiger dollars for my opening call to be able to either re-up or to be able to get my service, certainly as a trial, they're going to get it. And, of course, we had a special yesterday, which is really very nice, on getting my CD, introducing the Chapman Wave methodology. So this is what I wanted to show you. Let me just show you. This is the bonds right now, but I wanted to go to that very long term, that's outlook of bonds as I see it. And the question came up, where would bonds be if it wasn't for the Fed propping it up? And the answer has to be very simply that if this long-term, let me just do that right here, and then I'll get to the numbers and take your calls at 877, I keep typing it in yet, 877-927-6648. And while I'm doing this, in the portfolio that we have, yes, we do have some short positions on some key indices, but no short stocks, and there's a very good reason for that. But most importantly, we still have our long positions, and we're still trying to add to the long side. I mean, if that is anachronistic, I don't know. That is, that's quite something. But that's just the way I'm seeing the market. Fairly tight stops. Get taken out, you get taken out. But look at this. Do I have it here on this one? Is it easier to see? Yeah, I'll keep it on the white chart. I'm expanding. This is the monthly chart. And you can see that peak over there is a peak E/C. The way the technicals are right now, I'm sticking with E as the favorite, and C is the possibility of one more new recovery high coming. Now, what I discussed is that just as the dollar, let me just do this real quickly. If you look at the dollar on a long-term basis, you will, typing in the wrong place. You will see, I want you to do the juxtaposition here. You might not think they're related, but the principle is related. The dollar has actually had a very good rally, considering that the Fed has its foot on the head of the dollar. They're trying to keep it down because it helps our imports, exports. Now what's very important is that the dollar still had a lousy rally when you compare it to the others that have gone to single leg A up, or you could call it that, single A failure at 88.71 back in June of 2010. If you look at March of 2009, 89.62 from 70. Hey, nice percentage. But let me put it into the context here of squeezing the chart from 121 down to 70. This is just a pathetic little rally. This is the H pattern in the Chapman Wave methodology, going from an H to an M, and with another M, and it's possibly going to be a larger M with a target of the $86 on the 200-period exponential moving average looking out. Let's go back to that. So if you had to ask me, where would the dollar be under these circumstances, and I didn't know, I say it would be way, way off the low of 70. It would probably be about in the 93-ish area, 91 to 93. No, it's only at 83. If you said to me bonds have had been in kind of a sell mode for over a year, but the market has gone to all-time highs, where do you think bonds would be? And the most recent high, let's call it, I don't like to put the price in here because this is a continuous contract. That means the price is always changing. The highs and lows coincide exactly. The price movement coincides exactly, but the price itself gets smoothed out. So if I call it the high, I'll give you the date. The high of July of 2012, last year, 1 year ago, it was at 150, so over 150, that's on the continuous contract. Where would it be? I would have said, oh man, 139 to 137, easy, but I would imagine 128 to 125 is really where I would expect it. Well, it's trading now at 139. Now, what's happening? Just as the dollar's been pushed down by the Fed, I'm pushing with my hands, so I'm propping up. So you've got pressure the dollar and push up bonds. That's basically what's happening. So my feeling is still that if you look at not this chart here, I'm going to get out of that one, the black background chart, although the black background chart really gives you a fabulous feeling. Look at that, that's the cues. We discussed this yesterday. It was great to see some of the people from the Boston area. Great to see subscribers, and got to see the face with the name. It was fabulous. Look at the cues in this up channel. I'm going to go to the bonds right now, USP. Okay, got it. You see this up channel? 24-year. It's actually way, way more because it goes back to 1980s when the start of the bond rally began. If you're looking at this, look at that up channel, and we're just back inside it. So my suspicion is that it would be much lower. It's been propped up by the Fed. They can't always do that, but at this point they've got enough money to do it. So that's what I'm looking at there. I wanted to cover that so that we can now go to the other picture. Oh, I can see the chart here is actually very interesting. I think white background, let me just change to the white background, is a little clearer. I think I'm starting to get to where I can get the coloration on the white background chart so that you can really see these things very clearly. So the Dow is up 56 at 15,380. The S&P's down, the S&P's up 3.45 at 1657. The comp index is up 7 at 3498. Gold is down 20. Yeah, Fridays you always get this whack on gold at 1391. But it's still in the pattern. I'll just go to it. Let me just go to that. Yeah, I can see that chart. It's much clearer in the white background, although you get much more definition usually on the black. So look at this. The dollar DXY made a peak E. It's pulled back very sharply in this arch formation. How it handles the support at 82.50, 82.70 is going to be very important over the coming few days. So the dollar right now is up 54 cents at 83.62. You've got silver down 47 cents at 22.21. Platinum's down 21. Now this is very interesting. High-grade copper. I'm just going to go to high-grade copper here. I'm going to go to the HG. I'll go to the U contract. HGU. Yeah, this is holding well in an arch formation that has not yet broken to the downside. 330 right now. If it takes out in the next week, if it takes out 3.23, copper's coming right back down. If it actually rallies and it gets back to 3.4, I have to look at it as something that's very important that's happening. There's stability now in copper, and that's going to be very important. Very next thing is we're going to go to crude oil is down at 92.43. Bonds are down 20-30 seconds. Now that's going to be interesting because the TLT at this particular point is making a double, I can call it a double bottom. You don't know if it's a double bottom until it finishes playing out. 113.82 yesterday, on the 28th, on the TLT, Lehman 20-year T-bond fund, and today's low is 113.80. So there's a lower one. This is leg E to the downside. So now we've got to look at this and say, okay, normally under these circumstances, market pulls back, bonds would go up, and it hasn't done that at all. The 9-period exponential moving average has gone to a left side, right side price time match, breaking below the left side low of 114.62, made back, I think it was March the 10th or something, March the 8th, and went all the way up to 124.26 on the 1st of May. And now we're coming back down in an equal left side, right side price time match already for the second time, breaking the left side low bar. That's saying to me that monthly chart in the TLT is going to be absolutely important to watch. I have to start thinking it's a leg, it's a peak D at 132.21, and that's where you got to be careful in the Chapman wave because the MACD and the stochastic very poor. We're going to watch this real closely. I'll be back. Take your calls at 877-927-6648. Basil Chapman, Tiger Technicins Hour. Let's hear from you.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their program live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. I'm just looking at my Dow Quartet indexes. Sometimes we own these stocks, sometimes we don't, but I always treat it as an index. And it consists of GE, IBM, MMM, and UTX. Now this is very interesting. We spoke quite a bit yesterday about GE. GE right now is at 23.79. It's a stock we've owned before. We don't actually own it right now. It's walking the 9-period moving average. We discussed how important different indicators are, and this 9-period exponential moving average is just a most beautiful thing, because look how GE has walked along that path. Now it's a little bit like, for days now I've been meeting every single day to talk about the XLF. GE was really treated as if it was a financial, not so much anymore. They've got rid of a lot of the financial parts. They still have a huge chunk, but it isn't like it was. So let me just finish up here. So GE is acting well. IBM, talk about walking that 9-period exponential moving average. I have called this a leg F to the upside, and it's leg B, a gray B in the weekly chart, because that weekly chart is still way underneath the previous high of 200. Was that 211? I'll just tell you. No, it can't be. It must be higher than that. 215.90. So it's trading right now 215.90. It's trading right now at 211.60, really not that far away. And the monthly chart is this cluster pattern at the top, and I've got an alternate count with a G/C. Everything about it says it really looks like it's a peak C, and it's going to go to D. That's how it's standing right now. If IBM starts to break underneath 202 at any point in the next 3-4 weeks, that's different altogether without making a new high. So far, it's acting very well on the day, on the week, and even on the month. And then Triple M, very important stock, is making an oval pattern with the possibility of a Chapman wave stalk leg formation. Gosh, I never got to talk about that yesterday. Leg, no, capitals. Leg, body. Now, if that's the case, the Dow will sneak higher in this time frame rather than pull back, which I thought was a highly strong likelihood of at least a pullback. I don't know how deep, but in trying to organize the rotational aspect, leg E up in the weekly chart, leg E up. I've got leg E in the monthly chart, but everything is really strong except the daily chart. The price is going up. I haven't quite got the confirmation in the technicals. That's the heads up that I've got. So, but it's been a leader actually in the out of the Dow stocks in that cyclical sector. And leg F, I've got UTX, which is very important as well. And the UTX is acting well, but it's underneath the last high, and I treat it as my pilot light stock. With the potential, with the technicals, I have to consider the technicals are starting to fail, even though the price is held well in UTX. Leg C up, still very strong for the monthly chart. Everything about this chart says that it's going to take a little while to consolidate before it makes a new high. It'll be a surprise to me if it does it without the technicals participating, with the stochastic in the daily only at 39% and the MACD negative. So I'm watching this real closely. And you can see the mixed portfolio in these 4 stocks is very much like the mixed portfolio. Hey, who knew that under all these conditions, with the market absolutely being threatened by the potential of a Democrat, a leader being re-elected, and you've got the defense stocks, not defensive, but the defense stocks trading somewhere at all-time highs. Raytheon is testing at 67.49 all-time high by breaking above it. Yesterday it went to 60. I'll tell you what it went to yesterday. It went to 68.62. The last high was 67.49 back in 2008. There's that pattern that I talk about that I love to. In the last couple of Master Trader series, we spent a lot of time with this. The pattern that goes to an H with a successful test that can turn into a huge, powerful cup formation that goes all the way back up to the top. There it is. There's the H. Isn't that interesting? So that's very important, isn't it? You see, if you listen to the news, you read the papers, didn't look at the chart, you wouldn't see that there's just a vertical run to the top. Beautiful. The daily chart is in leg A, B, C, D, E. So you see, I'm getting all these E's and D's and F's in daily charts, and that says to me, you got to expect some kind of rotational correction here. Maybe we'll get it, maybe we won't. We're going to watch real closely. In the meantime, selectivity is the name of the game. There are some stocks that are looking really powerful regardless of what the market does. I'll be back at 877-927-6648. Call me.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. I don't know if anyone can remember, but I spent just about an entire show was it a week ago? I think it was maybe a week ago. I think it's a little more than a week, actually, on the defensive sector. Yeah, of course it was a little more than a week ago. On the whole defensive sector. Defense, not defense, but defensive. I looked at, you remember Procter & Gamble, and I said, I think this is a problem. Well, Procter was at the other heights of 82.35. The all-time high was 82.54. I'm not sure if that's all-time high. Let's see. Yeah, all-time high. And it looked to me like it was in trouble, that it wasn't as trouble, that there was a chance for a peak F top in the daily chart. That's in the Chapman methodology. If you got your technicals fading at a peak F, you got to be careful, or you can go short, because it could be in the monthly chart a hat trick top, daily, weekly, monthly. Well, the technicals were still quite good, and they actually are still quite good. And we won't have a peak established until 4 o'clock today, and that would say the 82.54 was a peak, and at this point I really do have to call it not peak B, but I'm giving emphasis on F, and here's why. The weekly chart has made a double top, and if it takes out, and I think it will, 76.35 by Friday week at the close, that will say it is done for now, it needs time. It might need a lot of price, but at least it needs time. The daily is saying, well, it's the same thing in the daily because that's the same rectangle formation. That's Procter & Gamble. Remember, I looked at Coke, I looked at Kellogg's. Kellogg's are fantastic. Went to a peak F with a doji candle. And this month, now I can say it because there's no way at 4 o'clock today, I don't often say this, there is no way today at 4 o'clock that Kellogg's, symbol K, trading at 62.57, can close or can touch 66.85 for a new all-time high. I've got it as a peak E in the weekly. I'm sorry, in the monthly. The peak F and a beautiful doji candle. Wow, this almost looks like the Dow when it made that October high in 2007. Doji candle at F. Wow, with the technical starting to fail. Kellogg's, I think, is going to be coming down. It's at 62.56. 60.28 is going to be really important support. And you remember in my technique using extensions like the Fibonacci extension, I said one of my favorite tools in the Fibonacci is the 261% expansion. And I said Kellogg's has just gone over it. This tells me it's in the hazardous area. It doesn't yet tell me. Other things will tell me whether it's going to collapse. But it's in the area we can expect a turn down. There it is. Peak F. This is a beautiful example of the Chapman wave methodology. You see, the MACD took you, the unbalanced volume before the RSI took you out way too early. The RSI took you out at about 64.68. It still went to 66, not way too early, but early. And it was a couple of months later. And then the unbalanced volume failed. The stochastic was much lower at peak F, and the MACD has now turned negative. So Kellogg's, look at Coca-Cola, KOA. I think I must just check my emails. I do have a question, and I'll get to it right now. So you've got Coca-Cola. I said leg. I've got an alternate wave count here. It could be F, it could be G. I forgot to put it in as a parallel wave count. A G/C. And because of the strength, I said I'm going to just leave it at that. And there's an up channel that I'm watching and a down channel. So that's the monthly. But the MACD and stochastic are now pulling back. The price is still in leg G/C, but the weekly has gone to peak E, and I'm going to call this because of the action there. I'm putting a down arrow to say it's in a sell mode in the weekly, and the top in the daily came in at peak D with a doji candle. Let's look at another one. We got PG. Hershey wasn't, didn't I? I think I put Hershey in the same. Yeah, Hershey's in a rectangle formation in the daily. But the weekly made a peak F top, and it's failed so far to take it up. But I haven't got a signal yet. I'm not going to talk about Hershey just yet, other than to say there's a good chance that Hershey will start to pull back, but only if and when it breaks. It's at 89.82. HSY is a symbol. Only when the weekly takes out, I'd say just 2 points lower, 3 points, 86.92. And it's in real trouble. So I just wanted to go through that. Now, here's something that I found very interesting when I was looking at all my charts. In the IYT, that's the transportation, iShares Dow Jones Transportation Average Index Fund, is still in leg C in the monthly chart, but I've got a C/F in the weekly. I've given C the preference, but we're going to see where it closes today, and I'll have to see how Tuesday's close comes out, because if by Tuesday it is much lower, having made an all-time high at 117.30 on the 20th of May, if it is below 114.16 right now, IYT, breaks 114.36, 114, let's call it, no, I didn't mean 112 at any point in the next week or two, then it too is going to go into a consolidation with a test of between 100 and 110 to, I'd even say 109. That's going to be the big test. Breaks to a new all-time high. That's big D. That's very positive. You know, in this kind of market, you couldn't say. Now, here's what's very interesting. IYR. This is the REITs. This is the iShares Dow Jones US Real Estate Index Trust. It's mostly commercial real estate. And people bought this wanting dividends. Now look what's happening. You've got a D in the monthly chart, way below 94.99 with a round number opening high back in February of 2007. Went down to a beautiful doji candle at 20.98. and that was in March. Was that March or earlier? I think that was in, March of 2009. And it's run all the way from 20.90, it's called a 21 to 76. I would say that that's a pretty darn good rally. And theoretically, it should take a little bit of a rest. And you can see peak F in those peak F tops, peak F in the weekly chart. MACD's just about to turn down. I'd already put the down arrow. And, of course, a peak D in the daily, which I had already talked about. So here you are. I don't know if this is going to be a hat-trick top. It seems to me that there's still strength in the MACD in the monthly. But, boy, this is going to be something to take notice of. The IYR, the iShares of the Dow Jones U.S. Real Estate Index Trust, that's giving a signal, at least in this rotational aspect, that this is another one of those sectors that needed a timeout, and it's getting. So you've got, now look at this, the IYC. This is amazing. IYC is holding up beautifully. It went, we did this yesterday during the show. I talked about it during the show. And I just want to finish this. So this E, so it makes an F. I'm calling this for now a peak F in the IYC. Why? Because the MACD and stochastic are deteriorating. The price is held up. But I have to go with my technicals. If it goes higher, that's fine. It could be one of those hats, the little cap that I put on it. If it goes to a G, or I have to call it a recycle. At this particular point, I'm saying at minimum, it's a consolidation, and it's a potential peak F /B. And I have to use the /B because the technicals are still so strong in the weekly chart. The candle that's going to be really important is a very ugly candle that takes it from 103, the IYC trading at 103.68, up 26 cents, down to below 101.50. And that is going to be important. Now, something we spoke about yesterday, the utilities. We're talking about bonds, utilities, and stuff like that. The utilities have got a potential leg D. I believe it's a leg D because it was a fractional new high. So it went to 41.44. Yep, 41.42. So it's, this is that technique that I call it's really the sign under the silent technique, all those indicators that I have that I call the doji candles, round numbers, etc. It's the silent technique. And what does it mean? It means that there was such a fractional difference between the high of 1 month and the high of the very next month at a D, E, or F that it's almost imperceptible. But if you look at it closely, it's a technique that I developed. I call it the 2-bar sell signal. And that's basically what's happened because I'm calling this a peak F in the weekly chart of the utility spider fund. The XLU trading up 32 cents at 38.32 with a peak G, a rare peak G in the daily. And you've got a left side price time match that's so far the support that has taken out the support that we would be looking for around about 37.69 back in March of 2000 and this year, 2013. I wanted to just go through those things because it's really important. If you're looking at the rotations, look at this now. Talk about rotations. Look at GM trading at 34.53, and I'd written down. I made a note and said, we want to start buying GM at the 22 level and the 18 level. This is after the IPO. Well, lo and behold, what did it hit? It hit 18.72. Did not buy it. Didn't buy it even further. I still don't buy it. Haven't got it. I think the United States automobile market is telling us the story of growth in the United States, and that's going to be really, really important. I believe that not in the short term. It's getting a little toppy right now. If you look at the monthly chart of General Motors, it's a beautiful double U, 2 U's at the bottom, making a large cup formation or a bowl formation and breakout. Beautiful base building. This breakout is going to be really important, and that tells me that there's a chance that the next really sharp market pullback has to include General Motors, Ford. It's got to include that whole very heavy industrial sector, because if it doesn't, you're going to have support. It's just not going to give you that 22-30% decline. It's just going to be maybe a single-digit decline. This is really important. And now you've got some other strength. We're looking at those heavy cyclicals, and in the portfolio I have for my subscribers, introducing, the portfolio called my Trader's Corner. That's part of my opening call. That's the final chart. My charts, for those of you who are new to my work, the charts start coming out at Tiger on the front page of TFN. You click, you go to the home page, you click, you put your password, and you go to it, and you see Chapman charts. You just start clicking these things from 6:30 in the morning. I'm busy sending out charts. Always this Dow chart right here, the most important one. This is the Dow. This Dow chart right here. This is the Dow. No, that's the 120-minute chart. Yeah, and that's the chart that's really important. The Dow, with all the comments and then the even further comments on it with the patterns that we look for. You want to see that. Why? Because if you're looking at that, you're going to find that particular pattern, that 9-period moving average in this case, is still a magnificent support level. You have to close decisively under that to really start a negative move. But the MACD and stochastic are poor, and that's really what is holding back the move in the Dow. I discussed that. There's the 120-minute chart. I discussed that. There is the 120-minute chart of the Dow. That was the diamonds. This is the Dow, and this is the VIX index, which is still at 14.56. Until it gets into the high 15s and the 16s, no selling will be sustained. This is the Trin index, Richard Arm's Trin index. And here's the pattern I'm looking at, that cup formation that is looking like a right shoulder pattern. My CD introducing the Chapman methodology, I talk about this pattern. It's really important and what to look for. So now let's go back to what I was saying. What I was saying is that in the patterns we look for, when you get to D, you've got to be somewhat careful. It doesn't say that you are going to pull back sharply, but that's where you can expect it. When you get to the cup and ladle breakout, which this is, because the pattern that we were looking for was 3208. And when it breaks 3208, you've got to expect at least a D. Well, we've just got the D. That says there again. Got to be a little careful. Looking out on the weekly, there's one particular index that says, hey, man, this is still early for the move in General Motors. So, and not only that, the monthly, of course, this is not the General Motors chart. General Motors goes back to the 1920s. So this is, in fact, the updated one when they got a little bit of money, just a little money from the government just to renegotiate, reorganize, and reset up. New chart. Okay, started a low back in the 18s in 2012, and now this is leg B above the 200-period moving average. What is the target? Sometime, either this summer or in the early fall, we will test 39.48, the high of January of 2011. Might be sooner. We'll see. So that's that. And I wanted to go through something else. So in that whole cycle, now what I was saying is in my opening call, that's the traders. Those charts keep coming out one by one. You get the Dow chart, then you get the diamonds, and you get usually the overview and market to Dow, giving you exactly what to look for during the day, what to look for in the VIX, what to look for in the Trin, if the Trin is going to be important, what to look for in the different parameters. And I do that with the Qs and the TLT and just the dollar, the GLD, the whole bunch of things. But most importantly, after I finish all those charts at about 8:35, somewhere around there, every morning, this is Eastern time, I send out my Trader's Corner, and there I do a quick recap at the very top of what I'm looking for. Is for those people who just don't have the time to look at all the other stuff, they can look at it in the evening, and all our positions, what we're looking at, what looks interesting, and I usually show the charts, the patterns. I give charts of those things that we have, or we are long or short. I'll be right back. 877-927-6648. Dow's up 30, S&P's up 0.96. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Folks, yeah, I do recommend try to listen to the show coming up. Nico and Paige, fabulous show. Just a great, great deal of information. Just about eating habits, eating what you do, living a primal lifestyle. Great show. And, of course, you've then got Daryl Martin. You've got Dave White. You've got, I'm not sure who's on 3. Then you've got, of course, right there at 4 o'clock to 6 o'clock, Tom O'Brien. Who else could you want to wrap up the week and give you projections for the next week? Just real quickly, I had a question about the euro dollar, 120-minute chart. There's a left side, right side price time match going on right now, and that took us to 1 bar early than the high that was made at 1.306, and that was on the 30th at 11 o'clock. That's yesterday. Now there's a pullback, and it's holding the 200-period exponential moving average. There's another left side, right side price time match that actually takes you into, I'm not sure yet whether it's Monday afternoon or Tuesday because of the Sunday evening trading. Don't have time to show it right now. But all that you have to expect is that the MACD and stochastic have pulled back very sharply. This is peak D in the Chapman way. That's what you look for. You got to your peak D. You've pulled back. And now what's really important is that if on Sunday evening, or by today or Sunday evening, if the 1.29, I'm going to call it 1.29, just there, 1.29404 level holds, and in fact it's run to 1.2995, but I would call it 1.3 1.3. If it can get to 1.3, there should be a rectangle formation to the upside that allows it to travel, but it has to break and hold the one over 1.30. At this particular point, it's just a bounce off the 200-period exponential moving average. That's all I can look at it and say it's done. But the MACD and stochastic are still weak. It's going to need time and a very sharp move. It has to hold above 1.29960. And it has to hold above it, I'm sure, for at least 2 full 120-minute bars to be able to get the stochastic to turn up. That's really important. Now, when I put that into context, all I'm saying is that peak D is where you can expect a sharp pullback. That's what you've got, is holding the 200-period moving average. If it pulls back under it, that 200-period moving average will become a magnet for it to keep trying to break above. If it goes above, it's got to break decisively away from the 1.295. Otherwise, this is a magnet that's going to keep coming back down there. I suspect it's now in a fairly narrow trading range, and I'd give it a trading range a little higher, a little lower, and you'll only get the very big break when it decisively undercuts 1.2950 or it breaks above 1.30. And that's the way I'm looking at it. Quick question on the Dow. Would I give an overview before we go off for the weekend? Folks, please stay tuned for Nico and Paige. Great show. Now, this is what I wanted to show you. As we're going out, INDU. The parameters to watch are really important. I believe the 9-period exponential moving average, it's still holding beautifully, but the MACD and stochastic are very poor. That's going to be a drag on the upside. So until you can see the Dow break above 15,542, that's only 90 points. That's really not a big deal to do at this stage. If it can't do it, I suspect we're going to go into a sideways consolidation with slightly lower highs, slightly lower lows, and if at any point 15,120 is broken, even it doesn't matter if you're in a close, if it's broken anytime next week, then the consolidation will be confirmed with a sell signal to sell mode. But the weekly chart is the one that's going to be, have to wait for 4 o'clock today. That weekly, and I'll be sending out to my subscribers, to my opening call, a very comprehensive overview. I'll have time this weekend to do it, about the 2 potential doji candles that have been made. An inside bar doji candle, very important this week. What does it mean, and what are the parameters to look for looking out? Thank you for being here. I do appreciate it. Don't forget Tiger Dollars. If you want to sign up for my newsletter and you want to use Tiger Dollars, this is a great time. But don't forget 2-week free trial, and it's there, right there. You just clock in and you just start getting those. You refresh to get all my charts. Thanks for being here. Stay tuned. Have a wonderful weekend. I'll be back Monday.